How you doing, everybody? My name is Kurt Henry, and I'm talking to you from the Mortgage Center. I work together with my dad, Randy Henry, and we are part of a mortgage brokerage. And our job is basically to work with multiple banks and lenders and to get them to compete for you to get you the best deal on your mortgage. Whether you're buying a house or renewing your mortgage, if you already own a house, or if you're looking to refinance your mortgage, which is just increasing your mortgage. So this is a weekly mortgage update just to let you know what's going on in the mortgage market. And it looks like the fixed rates might be taking a little bit of a slight decline. We're just waiting to see if that's going to be on a broader scale or if it's just a few lenders that are doing that. But it looks like some lenders are coming down just slightly. And variable rate is still about the same. Nothing really has changed there. It's about 2.25% for a variable rate. I just wanted to talk about in this video the idea of a cashback. If you're looking at buying a house, for example, if you're worried that you might not have enough cash for certain things, like say you have money for a down payment, but maybe you don't have enough money for closing costs, or maybe you want to be able to buy some furniture, or the washer and dryer, or whatever the case is. If you think that you're going to need a little bit more cash when you actually take possession of the house, there are options to get cash through the mortgage, and it's basically what they call a cashback. So a cashback is where the bank is going to give you the mortgage, just the normal mortgage money that you need to buy the house, but then sometimes the bank can give you some more cash on top of that, and it's just extra cash. And the reason why the bank would give that to you, don't get me wrong, banks don't give things for free, but what happens is the bank can give you cash, and because they're giving you cash, they call it a cashback, they would charge you a little bit of a higher interest rate. So just for an example, if you have a $200,000 mortgage, if you want a 3% cashback, so that means that 3% of the mortgage amount, so 3% of $200,000 is $6,000. So that might be the cashback amount. So when you take possession of your house, the bank might give you a $6,000 cashback for you to use it, for whatever you're using it for, whether it's like those items I just mentioned. Now, because they're doing that, they're going to give you a little bit of a higher interest rate, though. So just to give you an example, if your 5-year fixed rate, say the best 5-year fixed rate, for example, is 4.04%, if they're giving you a $6,000 cashback on a $200,000 mortgage, then they might charge you a rate more like something like 4.79%. And the way a cashback works is that because your rate is higher, you're now making a higher payment, mortgage payment, over your 5-year term. So basically, the money that they gave you up front, you are repaying to them over the 5-year term. And you're paying a little bit more back to them than what they gave you at the beginning. But it might be a way to get around the fact that you might be a little strapped for cash at the beginning. So if you are concerned about being a little strapped for cash and you want to buy a house, there are some options available. So I just wanted to point that out. There are some advantages to cashbacks, but there are some disadvantages to them as well. If you have any questions at all on anything like that, then the best way to get answers is to ask the person that sent you this video. And if you have any other questions beyond that, feel free to give us a call at the office. The number here is 905-436-8010. Thanks, and have a great day.